everybody. Welcome to the Fundamental Analysis webinar here with AvaTrade. My name is Troy. I'll be presenting. As always, keep in mind that there's risk involved with each trade that you take, so you want to manage risk in a way that makes sense for you. No one trade is guaranteed to profit. And also keep in mind that what we cover is not meant to be financial advisement, but is coming from an educational perspective. Now, we'll go over some risk management ideas within some of our trade simulations. If we have some time, there's some nice features that are built into our web trader and app that really make the risk management side of things quite a bit easier. To log into our web trader, we go from our main website here and log in, and all the features that you see in our web trader you'll also find are available in our mobile app. And it doesn't matter whether you're trading on MT4 or MT5, you can trade on both account types from our app and web trader. So if we log in here in the upper right corner, then you'll find yourself in our web trader platform. There's been quite a bit going on fundamentally this week out of the US in particular. The rate decision was yesterday with the US maintaining the interest rate. They held the rate without lowering it, as they had 3 times in a row before that. They had lowered 0.5%, a full percent, etc. As inflation has got a bit more under control, they've seen fit to ease the economic situation in terms of the high interest rates. But they're a bit worried that lowering the rates too fast could lead to inflation rising back up again. And really, the US in particular, they haven't reached their target inflation number yet. And so they want to be really careful about lowering interest rates too fast. And that's basically what Jerome Powell spoke about, who is the head of the FOMC committee, basically in the US, that determines monetary policy. That's what he spoke about yesterday, that they're going to be data driven. They're going to watch what the economic numbers look like with jobs and GDP, etc., to decide when and if they'll lower interest rates again in the coming weeks and months. I think the expectation is there'll be at least 1 rate cut this year, perhaps 2, but we'll see. There's no guarantee of that. But the markets tend to like the idea that, number one, they didn't raise the interest rate back up, and also that it seems that Jerome Powell and the FOMC committee are open to potential rate cuts anyways, moving forward in the US. The idea about lower interest rates, it makes it cheaper to do business. It makes it cheaper to buy houses, to buy cars, etc. Because anything that's being done off of borrowed money, the lower the interest rate, then the cheaper it is to go about doing those things. And so the markets tend to cheer the idea of lower interest rates rather than higher. And so there was a bit of fear going into that FOMC statement yesterday and rate decision, but after the smoke cleared and some earnings numbers came in from some big tech companies last night, the optimism came back, and we had a huge bounce, especially with the tech sector, but overall as well with the equities, the major indices. And that's kind of where we sit right now. The fear level's down a bit, and the markets in terms of the stocks and equities indices have gone up quite a bit. Now, with that said, we need to keep in mind the Trump administration out of the US is still threatening tariffs on various countries. I think the deadline for tariffs being enacted on Canada and Mexico is Saturday this week. And so we'll see if Canada and Mexico bend to Trump's demands. If not, we could see tariffs slapped on those 2 countries over the weekend. And so there could be some fear and volatility involved with that. So we probably want to be careful about carrying too much exposure from Friday into the weekend because of potential gapping from volatility changes coming out Sunday night, Monday morning when the markets reopen. So it's something to keep in mind. On different instruments, we can take a look at AvaProtect. which allows you to protect against all of that sort of thing. If we do 2 days protection, for example, with AvaProtect, any losses could be protected all the way through to Monday when you're placing trades on Thursday. Okay, 2 business days would take you to Friday and then Monday. So we'll look at some examples like that given the current fundamental news situation out of the US with the tariff threats. Okay, so with that said, we can take a look at some more specific data that's coming out today, tomorrow on the economic calendar, and then we can look at the more general news with some of what I just talked about in the market buzz to get some specific instruments maybe that you'd be interested to trade on, maybe in terms of the stocks, etc. So the economic calendar, if you haven't used our economic calendar, this will be interesting for you to see right now. If you have used it, then hopefully you're finding some success with some of the strategies that we go over with our economic calendar. And you may have looked at an economic calendar in the past and you say, okay, what's the big deal? An economic calendar, there you can find one in lots of places. But this economic calendar that we offer has some advanced tools and functionalities to go along with it to do some data-driven type trading. And so if we pick today's date, let's see, it's the 30th. We'll filter just today's announcements. You can filter by importance level of the announcements. I go with the medium and the high level announcements, and you can filter the countries that you're interested in. Usually you want to pick the larger economy type countries. Their announcements tend to have a bigger effect on the charts. Now we see a number of announcements came in today already. I already kind of scanned through these. We had mixed results out of the European Union. It was the largest number of announcements were out of the European Union today. Some better than expected, some worse than expected, kind of a balanced type day on the announcements. So I don't think that's a huge effect one way or the other after the fact anyways. If the announcements were just coming in, that would be a different story. And out of Great Britain also some data in terms of consumer credit coming in a little higher than expected. Mortgage lending also coming in a little higher than expected. So the mortgage approvals as well. So that could be bullish a bit for the pound currently. And so, maybe we're looking at Euro GBP pairings where the pound might have a little bit of a fundamental news advantage currently with these announcements that came in. Maybe if we have time, we'll take a peek at that pairing setup. But as we move forward further, we can get to announcements that have not occurred yet. And this is where some of the tools that I want to show you can really make a difference with your trading. And so we've got a rate decision coming out of the EU. And so the European Central Bank is expected to lower the interest rate. Now that tends to be bearish on the strength of a currency, meaning if you lower the interest rate, it's cheaper to get a hold of that currency then because you pay less interest to have it. So that tends to weaken a currency in general. Now that could be built into the current pricing, meaning it's expected that the rate will be decreased. And so maybe the euro already has weakened some in response to that expectation. So you get the larger effect if this comes in unexpected. If unexpectedly the rate is not decreased. If it comes in again at 3.15, then maybe you see an effect where perhaps the euro strengthens rapidly in response to a higher than expected interest rate. And vice versa, if this comes in lower than expected, if it's lowered more than down to 2.9, if it comes in at 2.7 or something, then you could see the euro maybe rapidly weaken in response to that because that would be unexpected. Okay, now we can look at the data from the past and say, well, how has this occurred in the past? Has it ever come in above forecast? You look at the data over the past year, not once. It hasn't come in above forecast. What about below forecast? And again, has not occurred. So what you see from this data is that typically rate decisions, they've got a pretty good line on the prediction in terms of what's going to happen, okay? On occasion, there's an unexpected result. And I kind of just alluded to the fact if it comes in higher than expected or lower than expected, you could probably expect a large reaction with the euro pairings, either strengthening or weakening, depending which unexpected direction it comes in. But what we see from the past is that it just doesn't typically happen. And so if we put in the past when it's matched the forecast, what has happened, and you see it's 50-50. It's as close to 50-50 as we can get. Half the time it went up, half the time it went down when it came in at expectation. So what we see here is out of 7 events, 3 times the euro strengthened, 4 times the euro weakened. They all came in at the expected predicted level. And so this is something when you use this tool that you can look at and say, I'm probably not interested in trading on this announcement, because the predictability, if you look at the past announcements, it's just not there. 50% of the time up, 50% of the time down approximately. So if I was watching this announcement, I would be waiting to see if it comes in a way that's not expected. If it comes in higher than expected or lower than expected, then I might trade on this, okay? So, but we don't have data on that because it hasn't occurred in the data range in the past year, okay? So this tool can be used not only to decide what you want to trade on, but what you don't want to trade on in terms of economic announcements, okay? So this is a powerful information to look at in a short period of time without actually having to get on the charts and do all of that checking of past charts over the past weeks and months, which could take hours really to do. In a few clicks, we just saw all that information, and we can make a pretty quick decision about what I might want to do with this announcement or not do, okay? Now we can go down to some other high-level announcements. Out of the US, we've got GDP growth rate numbers, we've got initial jobless claims, and we can see what effect has this announcement, one of these announcements, had in the past. And so, and again, with this tool, we can pick any currency pairing involving the currency of the country that we're looking at. This is the US announcement now, so any US pairings we can pick in the drop-down menu. We can pick different time frames after the announcements. I'll start with the 4-hour time frame. And again, we can qualify whether, in this case, the jobless claims came in at expectation, above expectation, or below. So in the past, if the initial jobless claims have been worse than expected, meaning higher than expected, above forecast, because we're talking about jobless claims, people who have lost work, if this comes in above forecast, that would be deemed worse than expected news. What we see is 100% of the time that when that has occurred in the past year, 4 out of all 4 times, the USD weakened when the news came in worse than expected. The euro climbed every time in this data set. So this makes my decision pretty easy then. I didn't really want to trade on the rate decision because that was 50-50, but this one is pretty strong data telling me that there's a tendency anyways, and in this case, a strong tendency, for the euro to go up against the US dollar if these initial jobless claims come in worse than expected, higher than expected. And what about the opposite? If this comes in below forecast, okay? It's not as strong, but there's a lot more dropping than rising, okay? But the data is not as strong when this comes in below forecast. So I might qualify with this announcement and say, okay, if the news is good news for the US, it's not as statistically significant here. It's as close to 50-50 as you can get. Now, the downward movements seem to be larger. The USD seems to strengthen more than the weakening distance up. But 3 out of 4 and 4 out of, 3 out of 7 and 4 out of 7 divided in opposite directions, to me, that's not as strong of a statistical reaction. So I would qualify this announcement. If I have time, I'll watch the announcement come in. If it comes in above forecast, I'm interested in trying to find an entry point to buy, because that's what the data set shows has happened in the past. In this case, 100% of the time. Eventually, it won't work, right? You're not going to win 100% of the time on any strategy if you try it again and again and again. But this is what data-driven trading shows us, that there's a tendency anyways in the past that this will rise if this data comes in higher than expected. So if it comes in lower, I'm probably not going to be interested in trading. If it comes in higher than expected, that's a move I'd probably look for an entry point. And you'd say, okay, but if I'm waiting for the data to come in, it probably already moved before I can place my trade. And I can show you if that's the case in the past. So, after 4 hours, we're looking at an average range movement of over 47 pips. If I look at this in the first 5 minutes after that data was released, the average range movement you see is only 10 pips, little over 10 pips. So most of the movement has not occurred in those first 5 minutes. Okay, so we see that they all started up in the first 5 minutes, but less than 5 pips, or maximum 5 pips, average range movement. And so then after 4 hours, you see average range movement over 47 pips. Okay, so it's not like you don't have time to get your trade off after seeing the data. And if it spikes down, well, hey, great. And by the way, it doesn't take 5 minutes to place a trade. You can place a trade in 30 seconds, or at least less than a minute to get a trade off if you've already got it prepared, knowing, hey, I'm only buying if this comes in above forecast. So you could already have the buy set up, ready to click go. And when the numbers come in, if you see an entry point you like, then you can make the trade if the numbers came in the way that you were hoping. Okay, and maybe even catch a spike down in this example before it goes up, which happens a lot of times around announcements. You get false moves before the real move. So again, you don't win every time with this, but if you try, these are repetitive announcements. They come out each week, each month, over and over and over. So if you try certain announcements 10, 15, 20 times with this strategy, you might find, okay, I have better success with the jobless claims announcements, less success with the GDP announcement. And then you start to zero in on the announcements that are best for you to use repeatedly as one of your trading strategies each week, each month. Okay, and get enough data points to make sure that you're confident. Don't try it once, and if it loses, say, oh, well, that didn't work. Try it again and again with limited exposure amount per trade, and see what your percent success is with different announcements as you try the strategy. Okay, and then it becomes maybe one of your strategies that's in your tool bag to employ, to diversify the way you trade. Okay, and we could look at the GDP numbers as well and see what effect have those had. If it's above forecast, okay, it's happened once, and it went, and the euro went up against the USD. If it's below forecast, it happened twice, and it also went up against the USD. So that starts to tell me the results of this announcement are not what's driving the movement, because it came in below forecast and the euro went up, came in above forecast and the euro went up against the USD. So it's not this announcement that's driving the movement. You see that it's at the same time as the jobless claims. So when these two announcements come in at the same time, the one that's showing predictability with how the results come in are the jobless claims. The GDP growth rate, the movement went in the same direction regardless of how the GDP numbers came in. So it tells me I'm not going to key off of this number. I would key off of these numbers. They're coming in at the same time, but the initial jobless claims seem to be driving the direction in those past movements. Okay, so that's important to pay attention to as well. Now we can go down to pending home sales. It's listed as a medium level announcement out of the US, but there's a big focus on home sales right now because the interest rates are so high still in the US. They haven't lowered them down all the way because they're trying to kill inflation. But that's hurting maybe people who want to buy homes and can't afford to buy a house with those high interest rates. And so this is a good gauge of the US economy, the pending home sales. So this you might find affects the results of this number could affect the movement of different currency pairings with the USD. Okay, again, we can switch to different currency pairings, different time frames. And if the home sales come in above forecast, that's considered good news. What we see is 80% of the time the euro went up. Okay, if this comes in below forecast, 2/3 of the time the euro went down against the USD. So it's the opposite in my head of what I would expect. I would think if the home sales were better than expected, the USD would strengthen. In this case, the data shows the USD weakens when the pending home sales are higher than expected, and vice versa. The USD strengthened when the pending home sales were lower than expected. And so below forecast with pending home sales, the majority of the time the USD has strengthened. Okay, pending home sales above forecast, the majority of the time the USD has weakened. Okay, 80% of the time against the euro. So sometimes the data shows you the opposite result of what you might have expected. And rather than trying to think what you should do, many traders will just use data-driven trading because this is what the data shows in the past. Home sales come in above forecast. The USD actually has weakened in response to that. So make what you will of that, but that's what the data shows. And if you're going to trade strictly by the data, this is what you would do, and that's pretty strong percentage there. We've got 5 times that it happened, 4 times it went rushing up, the euro did, against the USD, and the 1 time it dropped, it just barely dropped. So there's something to these pending home sales that when they come in above forecast, the euro is strengthening against the USD pretty convincingly. Okay, average range movement 44 pips, it shows here. And we can see in the first 5 minutes, the opposite. The immediate reaction was 80% down in the first 5 minutes. So that's the direction that my mind tells me it should have went. The knee-jerk reaction is better home sales. Why would the USD weaken? It should strengthen. And in the first 5 minutes, the USD strengthened and pulled the euro down almost immediately. And that's the response you might expect. But it turns out that data set doesn't hold the movement. It's not important enough. And you see it's a medium level announcement, right? Maybe that's why it's listed as medium. It doesn't actually hold the momentum, the pending home sales, as much as maybe the initial jobless claims showed us it does. And that's the difference you might see between high level announcements and medium level announcements. So only with this tool can you see that. So if this announcement comes in above forecast, I'm waiting 5 minutes to see if this spikes down like it has the majority of the time in the past. And then I'm buying because after 4 hours, the data shows that it's up 80% of the time. Okay, so I have an entire trade plan with this. I'm only interested if it comes in above forecast, and only after 5 minutes, if it spiked down in those first 5 minutes, then I'll buy. Because that's what the data shows me has happened on almost every movement in the past when it comes in above forecast. An immediate reaction, US strengthening, longer reaction, USD giving it back to the euro as the euro climbs. Okay, you might interpret the data different, by the way. It's more of an art than a science. And so I'm not here to tell you you should buy if it comes in above forecast or that you should wait 5 minutes before buying. I'm just showing you how I interpret the data, what it's showing me with the factual evidence on the chart. You make the decision when you would buy or sell, but the information is there for you to interpret just the way I'm trying to interpret the data, okay? But you make the data your own in terms of when you would want to make a trade in which direction, okay? Let me pause for a moment and ask, are there any questions, comments? And if you're wondering, the European Central Bank press conference, why didn't I go over that one? Because that's a big deal. That will, after their rate decision, then the press conference comes in the European Union. Why did we not look at that data there? It's not an actual number that comes out with a press conference. So we can't see if it comes in better than expected or worse. You have to actually sit and listen to the press conference and interpret what they're saying. And are they talking about, monetary policy of, more rate cuts to come, or are they talking about, holding the rates steady moving forward? What they say then moves the markets, and you don't see that as a number coming out. You would actually have to sit and listen to that press conference, which then we can look at the data, what happened during those press conferences in the past. Usually it's 50-50, and that's what we see here. Like we've got the Euro GBP 4 hours after the event, 3 times up, 4 times down, almost equal distance movement up and down. That's what you expect during a press conference a lot of times, because it's not a single number. They're talking about one thing and then another thing, and reporters are asking questions, and they mention one bit of information and then another, and the movement's half up and half down. That's usually the way that goes, and that's what the data just showed us when we looked at it. So that's why I kind of skipped over that, because that's the typical result with a press conference. Every once in a while, you'll hear something succinct that's said during a press conference, and the market reacts really big in one direction, keeps running, but that's hit or miss. You don't know when they might say something like that. I find it easier with the announcements that come in with actual numbers to do this strategy of data-driven trading. Okay, I don't see any questions popping up, so we could move on to another strategy idea. There are more announcements we could look at, but I don't want to kill all our time with one strategy concept. So the idea with that calendar, any weekend, Saturday, Sunday, you can go through the upcoming week's announcements and do exactly what we just did. Make a schedule of the announcements that look like they've had the most predictable movements after the numbers have come in the past, and write down your schedule of which announcements you'll trade on and in which direction based on how the numbers may come in, okay? And I'm qualifying some of them that I would only buy if it came in one way, but I won't sell if it comes in the other. Others I might trade either direction. It depends on what the past data shows with those numbers coming in. And so you can have that set as a strategy for those announcements that fit your trading schedule when you're not at work or not sleeping, to trade on those announcements maybe. Now, another idea, we can go to the market buzz. And basically, rather than searching 100 different websites, trying to find information about whatever it is you want to trade on, you can use the market buzz. It does that for you. For example, Microsoft is trending huge now. For a long time, NVIDIA was trending the most of anything. Now it's Microsoft. Why? If you don't know that they had their earnings reported last night, and that their data came in better than expected for earnings per share and for revenue. If you didn't know that occurred, you wouldn't know why they're trending so much. But if you click on Microsoft in this tool, since they're the biggest circle, we can real quick find out what's going on with Microsoft, okay? First of all, here's a technical breakdown. It says price may rise 6.9%, so it's a bullish forecast. There's no guarantee that it'll go up 6.9%, but that's the prediction here. And if you click on the trend analysis, you can get the breakdown of support and resistance levels, the expected price levels for this to rise to. You have all the technical analysis broken down here for you. This is a signal, basically. So you've got a technical signal to pair with the news, which is over here. Here's your news feed. And as you scroll down, you'll find out, how does Microsoft connect with OpenAI and all this news about DeepSeek. If you haven't heard that news yet, you can click this link and read the article. DeepSeek is a competitor of OpenAI for artificial intelligence, chatbot, etc. And apparently they found a way to do the same thing OpenAI has been doing, but cheaper, offering their product for cheaper or for free, even their advanced version, and doing it with less processing power, etc. And that really shook the market earlier this week before bouncing back with those earnings numbers that were good out of Microsoft and Meta Platforms, etc. Had some really good numbers last night that helped the market out. But you can read the article here, and for Microsoft, NVIDIA crashed because of and OpenAI crashed down some in their values because of this DeepSeek story. But for other companies like Microsoft, hey, that could be great news. That's actually helping. If you read the articles that are here, you might see that Microsoft's happy that there's a competitor to OpenAI, even if it's a Chinese company. They're happy to have a cheaper way to do artificial intelligence rather than having to develop it themselves, which is costly. So this cheaper, less costly version for AI services, companies like Microsoft, that's actually maybe bullish for them. Okay, even though other companies that produce AI got scared. Investors got scared because, hey, there's a competitor that's doing it cheaper. So those stocks were hurt while something like Microsoft might be helped. And you can read those articles. You just click the link. It says story, it gives you a little synopsis, a summary of what's in the article. And if you want to read the whole article, just click story continues, and it takes you directly to the source, and you can start to read exactly what's the latest news. involving whatever it is you're going to trade on, in this case, Microsoft, but it also ties in to other companies as well. As you see, they're even mentioned in the headline. And you can scroll down, you'll see articles about the earnings that just came out, as I already mentioned, that they were better than expected. And as you scroll down, you'll see you can go through a number of articles, and we're still only back 3 hours in time. These are all recent articles and links that came out. And so you can quickly find out, here's an article, Meta posts big profit, Microsoft net income rises 10%. So both Meta platforms and Microsoft, you're finding information here about. So we can click and find out, well, what happened with their earnings numbers? You click and you can read the article, okay? Huge numbers they posted, better than expected. Better growth in earnings per share, better revenue coming in. And so you can read all about what you need to know before making a decision whether you want to buy or sell. So what's nice about this area in the market buzz is you not only can read the news that just came out, and in this case, it's bullish news. It sounds like that's good news for Microsoft and others. But also you get the technical analysis signal that also says it's expected to rise and shows you the price levels, etc. And so now you have more than one reason within this strategy, maybe to buy on Microsoft, for example. If you read these articles and feel that they tell you information that you think will help Microsoft rise. And if you interpret this news to mean that, then you combine that with the technical signal that also is saying that maybe you could think about buying, then that becomes not just a trading tool, but a strategy. You take more than one tool, the market buzz news, and you combine it with another tool, the technical signal, all of this found in one place in our platform. And now you have a second strategy beyond the announcement schedule that we started the webinar with, which was a separate strategy trading off those announcements. But now you have a second strategy to diversify and use these signals combined with recent news articles to decide whether you trust the signal or not. I don't advocate just blindly following signals without checking the latest news, because the signal might have come out and they said, yeah, we expect it to rise, but then you see an article that says bad news for Microsoft just came out, then maybe you don't follow that signal. So qualify which signals you trust most by checking the most recent news to see if it is in line with the signal, okay? Not every signal is going to align with the most recent news. And so sometimes people complain, hey, I try the signals and I lose as much as I win. If that's the case, try also adding a second bit of information to qualify which signals you trust most. And I believe that'll help you improve your win percentage on those signals, okay? Again, I'm going to pause. Any questions, comments? Okay, I must have been clear. I don't see anyone dropping out while we were doing the session, so it must have been interesting, but I don't see any questions popping up either. So I must have been pretty clear with what I was explaining. I think this is a good place to stop. My next session is next week. I do an evening session on Wednesdays, 6 p.m. UK time. And then this session, same day, same time next week as well. So you're welcome to drop back in. And between now and then, good luck with your trading. Oh, you know what? I mentioned AvaProtect, and we didn't take the time to look at that. Let me just show you real quick. I'll bring up any asset or instrument that has it. The FX pairings, gold and silver, all have AvaProtect as an option. I just want to show you in the order window. Let's say you decided you think gold will keep rising because there's fear about tariffs coming or something, and I'm just making that up. But let's say that's your idea. The fundamental, news that Trump may raise tariffs over the weekend. You think maybe that could create fear, and gold might go up as a safe haven if that's how you felt. So I might decide I want to buy on gold and have my take profit up at we're at 2778. Maybe I think it could go up to a new high and hit 2900, for example. So I put my take profit at 2900, and I see that would make me $42,000. Okay, wow, that's amazing. But maybe I want, in case this goes flying the wrong way, since there's such volatility lately, I want to protect this trade. through the weekend, through tomorrow and the weekend. So I can protect it by the hour or by the day. And so for 2 days protection, to take me all the way to Monday at this time, it shows my expiry date and time for the protection. It doesn't matter if it goes flying the wrong way, $100 an ounce. I don't lose anything from that. Okay, that's all paid back. Any losses during the protected time period, when the protection ends or when the trade closes, whichever happens first, if there's any negative floating on the trade, you get paid back. Or if you get stopped out, you get paid back the negative loss on that trade. You get paid back everything except the cost of the protection. So you cap your risk during the protected time period with this protection, rather than using a stop loss that could get hit in a short period of time and then it goes the right way and you take the loss and then it ends up going the right way. That has happened to us all, I think. So this is a way to avoid that when there's a lot of volatility, where you can get through a spike the wrong way without having to risk a bunch or keep moving your stop loss further away. You don't need to do that when you have this protection. Okay, it's really a useful tool, and there's a lot of volatility like has been happening. But maybe I don't want to risk 5,000. Okay, maybe I want to risk a certain percent of my balance, 0.5%, 1%, something like that. So I'm going to lower the trade size, maybe to 0.5 lot, not 3.5. Now the protection only costs $724, and I can still make over 6,000. What, 9 to 1 ratio potential profit compared to the cost of the protection? Okay, it's starting to sound like a better strategy idea. Maybe I'll lower this a little more, so I'm risking only 1% of my balance. You see here now it's telling me I'm risking 579. My balance is 55,900. It's a little over 1%. So maybe I'll just go to 0.38, and now I'm just under 1% of my balance. Okay, so you can determine the amount you want to risk, per trade. If you have 10,000 in your account, then 1% of that is a certain amount. $10 for 1,000 is 1%. $100 for 10,000 is 1%, or you can risk 0.5% or 2%, whatever amount makes sense to you per trade. But the point is, you can risk manage here very easily. It's calculating based on your trade size, what the protection costs, or if you have your stop loss marked, it's going to calculate for you what you're risking possible loss to my stop loss. Okay, so once I have this set up, if I like the setup, then I can go ahead and make the move. And I have a capped risk. So that just cost me $550 to try and make over $5,000, $6,000, depending on where I put my take profit. Now I can track this trade here. It shows I have protection on it. It shows my take profit price, which I could modify if I want. If I click on the information tab here, I can see how much time is left in my protection, 99 hours and 21 minutes of protected time still. So I can be very patient with this movement, even if it goes the wrong way initially. And I can wait this out and see if the fundamental fear of tariffs on this trade might drive gold up to a new high, which 2,900 would be a new high. And I obviously can check back on this tomorrow, early on Monday, and if I'm at a profit I like, something that made back more than what the protection cost me, I can close it manually if I want, okay? Or if it's flying the wrong way, then I'm protected and I can close and take that payment back and reopen if I want as well, okay? With only the loss of the cost of the protection. All right. Any questions on that before we close things off? Okay, great, guys. Thanks for sticking with me. I'm sorry I threw that in at the end, but I wanted to make sure I had mentioned the AvaProtect when we started, and I wanted to make sure we went through at least one example. All right, good luck with your trading the rest of the week, and we'll be back at it next week. Thanks, everybody. Bye.